discussed about asset is equals to capital plus liabilities, that is accounting equation, and a few examples. As Mr. Alex started his business, the introduction of capital and the effect of the transaction in the balance sheet and the journal entries, the purchase of an asset by check, and the purchase of an asset and the incurring of liability. Just for a quick review, now today we take a few more examples. Now let's say in our last example we discussed the purchase of an asset and incurring of a liability, okay? And now sale of an asset on credit. Sale of an asset on credit on 10th of May 2021. Goods which cost $600 were sold to Mr. Peter for the same amount. The money to be paid later. Now the effect is a reduction in the stock of goods, okay? The effect is a reduction in the stock of goods and creation of a new asset. Reduction in the stock of goods and the creation of a new asset, okay? How it is possible? Like a person who owed the business money is known as a person who owe the business money is known in accounting language as a debtor. Now the effect on May 10th 2021, goods which cost $600 were sold to Mr. Peter for the same amount. The money to be paid later. He will pay money after some time. The effect is a reduction in the stock of goods and creation of a new asset. A person, now this is the term, a person who owes the business money or to whom we sold goods on credit is a debtor, is our debtor, okay? Now the effect in the balance sheet should be balance sheet as at 10th of May 2021. Assets amount, okay? Shop we purchased earlier 32,000. Stock of goods 6,400. Now the stock of goods is 6,400. In our previous example, now let's do a quick comparison. The effect of this transaction, as I told you, is the reduction in the stock of goods and creation of a new